Hey everyone, welcome back to Corporate Decoder. Today we are diving into a retirement fund report that might sound a bit dry, but stick with me because there are some hidden gems and eye-opening figures in here. We're talking about the T. Rowe Price Retirement 2040 Fund's latest semi-annual report. Think of it as peeking under the hood of a large investment vehicle. Before we jump in, if you love getting straight talk on complex financial documents, make sure you are subscribed to the channel. We also have a Discord community where we break down these types of reports further, so check that link in the description below. This document is essentially a shareholder report, giving you a look at how the fund performed and what it was invested in. It covers the period from the 1st of June 2025 to the 30th of November 2025. Let's start with the costs. For a hypothetical $10,000 investment in the investor class of the Retirement 2040 Fund, the costs over these 6 months were about $31 or 0.59%. That is not too bad, but remember, these are just the costs for this specific period at this share class. Now for some big numbers, the fund's total net assets were a whopping $26,529,543,000. That is a lot of zeros, meaning a massive amount of money is entrusted to this fund, and they held 30 different investment positions. Where is all that money going? The fund is heavily invested in domestic equity funds, making up 61.6% of its assets. So it is leaning heavily on stocks from companies in the US. Then comes international equity funds at 26%. So the fund is also looking abroad for growth opportunities. Domestic bond funds represent 7.5% and international bond funds 3.2%. Bonds are generally seen as a safer investment than stocks. So this suggests a bit of a cautious approach alongside the equity investments. A very small portion, just 0.2%, is in US Treasury debt, which is considered very safe. And finally, 1.5% is in short-term and other investments, which are usually highly liquid and low risk. So what are the top holdings within this fund? The biggest single investment is in the T. Rowe Price Value Fund, making up 13.8% of the total assets. Close behind is the T. Rowe Price Growth Stock Fund at 13.6%. These two alone make up a significant chunk of the fund. Next up is the T. Rowe Price Equity Index 500 Fund at 9.2%. This fund tracks the S&P 500, meaning it holds large, well-known US companies. Then we have the T. Rowe Price US Large Cap Core Fund at 8.8%. This sounds very similar to the Equity Index 500 Fund, focusing on large US companies. The International Value Equity Fund comes in at 8%, showing the fund's commitment to international markets. The Overseas Stock Fund holds 7.1% of the assets. The Real Assets Fund accounts for 5.8%, likely holding things like real estate or commodities. The International Stock Fund is at 5.7%, and rounding out the top 10 is the New Income Fund at 4.6%. This sounds like a bond fund that focuses on generating income. The last of the top 10 is the Mid-Cap Value Fund at 2.9%, showing they're looking at medium-sized companies too. What about how actively the fund is trading? The portfolio turnover rate was 5.6%. A low turnover rate generally means the fund is holding onto its investments for a longer time, which can be good for tax efficiency and can indicate a more buy and hold strategy. Moving into the financial statements, we see the net asset value, or NAV, per S-Hair. For the investor class, it started the period at $31.88 and ended at $35.68. That is a solid gain. Looking at the total return for the investor class, it was 11.92% for this 6-month period. That is a great return and beats many market benchmarks for that time frame. The gross expenses before payments by Price Associates was 0.59%, and the net expenses after those payments were also 0.59%. This means the expenses are pretty stable. Net investment income was 0.11%. For the investor class, the net assets at the end of the period were $9,097 million, or over $9 billion. Now looking at the advisor class, the NAV per S-Hair went from $31.42 to $35.12. Also a good increase. The advisor class saw a total return of 11.78%. Very similar to the investor class. Their gross expenses were 0.84%. This is higher than the investor class, which makes sense given the differing fee structures we'll see later. Net expenses were also 0.84%. Net investment income was actually negative 0.14% for this period, which is interesting. For the advisor class, the net assets were $456 million. For the R class, the NAV per S-Hair rose from $31.01 to $34.61. The R class had a total return of 11.61%, again very close to the other classes. The gross expenses for the R class were 1.09%. As expected, this is the highest expense ratio of the classes we've seen so far. Net expenses were also 1.09%. Net investment income was negative 0.39% for this period. The R class has net assets of $1, 336 million. Lastly, the I class, which typically has the highest investment minimums, saw its NAV per S-hair go from $31.89 to $35.73. The I class delivered a total return of 12.04%, slightly outperforming the others. Their gross expenses were just 0.42%, the lowest of all classes. Net expenses were also 0.42%. Net investment income was 0.28% for the period. The I class has the largest net assets by far at $14, $641 million, or over $14 billion. This highlights how popular this share class is for larger investors. Now let's dig into the actual investments. This section, the portfolio of investments, is really the heart of understanding what the fund is doing. We see a detailed breakdown of what they bought and sold. Under bond funds, we see the New Income Fund, the US Treasury Long-Term Index Fund, and an International Bond Fund. Among others, the total for bond funds is listed at 10.7%. The equity fund section is much larger at 87.6%. Here we see all those familiar T. Rowe Price funds like the Value Fund, Growth Stock Fund, and the S&P 500 Index Fund. There are short-term investments at 1.7%, including money market funds and US Treasury bills. Interestingly, the fund also employs futures contracts. We see short positions in MSCI EAFE Index Russell 2000 E-mini Index and S&P 500 E-mini Index contracts. These are used to manage risk, likely hedging against market downturns or to adjust exposure efficiently. The unrealized loss on these was about $5.3 million. This section on affiliated companies is crucial for understanding the fund's structure. The fund primarily invests in other T. Rowe Price funds. The report details the net realized gains, unrealized gains, and investment income generated from these affiliated investments. For instance, the Equity Index 500 Fund contributed a net realized gain of over $92 million and a change in net unrealized gain of over $255 million. This shows the fund's performance is directly tied to the performance of these underlying T. Rowe Price funds. Looking at the statement of assets and liabilities, the total net assets are indeed $26,529,543,000. Liabilities include things like payable for shares redeemed and investment management fees. The statement of operations shows how the fund made and spent money. For the 6 months ending the 30th of November 2025, total income was over $90 million, mostly from income distributions from underlying price funds. Expenses totaled nearly $70 million, with investment management and administrative expenses being the largest chunk. The fund saw a significant net realized gain of $356.781 million, and the change in net unrealized gain was even larger at over $2.5 billion. This massive unrealized gain is driven by the overall market performance of the underlying assets. This all resulted in a substantial increase in net assets from operations of close to $3 billion for the period. The statement of changes in net assets breaks down how the fund's net assets changed. The increase from operations is clear, but we also see movements from distributions and capital share transactions. We can see that for the investor class, shares sold were over 14 million, while shares redeemed were over 33 million, leading to a decrease in shares outstanding for that class. This is a common pattern as funds mature and people start to withdraw money. The notes to the financial statements provide important context. This section mentions that the fund invests in a portfolio of other T. Rowe Price stock and bond funds, and its asset mix will become more conservative over time. This is typical for a target date retirement fund where the investment strategy automatically adjusts as the target retirement year approaches. This fund uses derivative instruments, specifically futures contracts, as we saw earlier. They're used to manage risk, remain fully invested, or facilitate asset allocation. While they add complexity, they are a standard tool for large funds to manage market exposure. This is a critical section. The fund is managed by T. Rowe Price Associates, Inc., which also manages all the underlying funds. This means significant amounts of money are flowing within the T. Rowe Price family of companies. The management fees are described as an all-inclusive fee that covers most operating expenses. With rates varying by share class, the investor, advisor, and R classes have a fee ranging from 0.64% to 0.49%, while the I class has a lower range of 0.46% to 0.34%. This confirms why the I class has the lowest expenses. This final section talks about the unpredictable nature of global events and how they can affect the economy and markets. It is a standard disclaimer reminding investors that unexpected events can impact their investments. So, what is the story here? This report paints a picture of a large, well-established retirement fund that has performed very well over the last 6 months, largely driven by strong market returns. The fund is heavily invested in T. Rowe Price's own equity funds, which is common for target date funds. The different share classes have varying expense ratios, with the I class being the most cost-effective for larger investors. The fund's strategy of investing in other T. Rowe Price funds means its performance is intrinsically linked to the success of those underlying funds. The use of futures contracts suggests a sophisticated approach to risk management. A potential concern, though, a common one for funds focused on a specific retirement date, is the inevitable shift towards more conservative investments as the 2040 target date approaches. Investors nearing retirement might want to pay close attention to how that asset allocation evolves. Overall, the T. Rowe Price Retirement 2040 Fund appears to be functioning as intended, delivering solid returns in a favourable market environment. The transparency in its holdings and operations is commendable. Alright, that is our deep dive into the T. Rowe Price Retirement 2040 Fund semi-annual report. What are your thoughts on these numbers and the fund's strategy? Do you invest in similar target date funds? Let me know in the comments below. If this breakdown was helpful, please hit that like button and subscribe for more corporate financial analysis. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and I'll see you in the next episode of Corporate Decoder.